I'm Jim Jubak, and welcome to my YouTube video for August 4th. I'm wearing my very old and treasured Roswell Rockets minor league baseball t-shirt and my District 51 hat, sort of as an homage to what's going on right now in China, and a reminder that really wacky stuff can happen, space aliens, UFOs, whatever. Okay, before we go to China, let's talk about my other sites. Jubak Picks, which is my free site. You get 3 portfolios. Jubak AM, which is my subscription site, where you get 6 portfolios. You can find links to them both below. What we're seeing in China now is it's really kind of pushing us outside the bounds of what we might expect. There are things, it's the confluence of things that's really extraordinary. So we've had a big attack upon Chinese entrepreneurs, Chinese internet companies, Alibaba, Tencent, etc. So that's really disrupted big sectors of the Chinese economy. At the same time, as we have elsewhere around the world, we've had a huge resurgence of new variant. So we've had big outbreaks in places where it had been under control. So, for example, China is going to have to has decided that it's going to have to test all 12 million residents of Wuhan. The other thing that's going on at the same time is you've had some really bad global climate change related flooding and sandstorms. There are amazing videos on the internet of a sandstorm basically just blotting out all light in a northern Chinese city as it sweeps in from the desert. All these things are going on at once, and what we're seeing is that there's the question around the world about how long the bounce in economic growth is going to last. You know, we're comparing second quarter 2021 to second quarter 2020, and since the second quarter of 2020 was the pandemic recession, it looks really great. We got 60, 70, 80% earnings growth. The question was how long it was going to last. The problem is that these events in China, these trends, have combined to really truncate any bounce. So that now Nomura, the Japanese security firm, came out the other day and said, hey, you know, we thought we were going to see third quarter growth in China of 6.4% in GDP. We're now talking about 5.1. That's an extraordinary drop from one forecast to another, 6.4 to 5.1. For the fourth quarter, they said, well, hey, you know, not 5.3 even, which is what we used to project, 4.4%. So you're seeing a big slide. So the question is really what happens in China if this happens? What happens around the rest of the world if this happens? The growth rate in the Chinese economy and the Chinese demand for raw materials has a huge impact upon emerging markets, stock markets and economies. So I expect to see those down. Commodity prices, if China's not producing as much and exporting as much, you can see the price of copper, tin, etc., go down from all-time highs further. Could have an impact on European exporters, especially cars. Chips, China gets still about 80–90% of its chips are imported. China is trying to fix that, but right now we're seeing a huge, this is a huge market for companies like Taiwan Semiconductor Manufacturing. All these things are leading to me to worry about, hey, if we're getting a slowdown in Chinese growth, it leads to a slowdown in growth elsewhere in the world. Not a good thing to be happening at a time when we're seeing the Delta variant knock the stuffings out of other economies. This is a chart for stock DD Global. It's one of the biggest ride-hailing companies in China. This is basically, this is a short chart for the year because they only went public back here in June, and they got whammed because regulators decided that they went public in the United States, on the U.S. market, New York market. Regulators decided that they weren't really happy with the way that the company handled that. They came down really hard, questioned the offering, and said things like, we're not going to let people download your app because we think such bad things. This is not a good thing to have happen to a ride-sharing company. So we go from 16 down to 19. This is sort of the poster child for the crackdown. But I want to show you that it's not limited to that. And let's take a look at the chart for Tencent Holding. Tencent Holdings is the biggest gaming company in the world. It is in China. It owns WeChat, the biggest texting and chatting app. Has a store. It's big deal. Pony Ma, who runs the company, founded the company, is pretty sophisticated when it comes to working with the Chinese government to stay ahead of things, and knows, and he's not like Jack Ma over at Alibaba, who started this all off by saying things that could be interpreted as critical of the current regime, and then wound up being disappeared for a while. Tencent doesn't work like that, but it's been slammed nonetheless, because this is no longer just about one personality or one company. This is about, I think, a concerted campaign. So we go from February, when we're at almost 100, down to where we are at the beginning of August, down to 60. So we've seen a stock go down about 40% in the course of a couple of months. This isn't the worst performing stock on the Chinese markets. Haidilao. This is a hot pot chain. Hot pots, if you're not an aficionado of hot pots, you should be. Basically, you get a simmering concoction of things. You get to decide what you want: noodles, how many vegetables, what tofu, whatever. This is the biggest chain. And as you notice, what happened here, so we're talking about February, 83, down to here. Now this 83 down to 27. Now this is not a result of government action. This is a result of the pandemic in China, the shutdown in China, and then this is fears about what's going to happen. So basically the company came out with a profit warning that said, hey, we're seeing growth slow, we're seeing traffic is back up. They were saying the traffic is back up to about 75% of where it was before the pandemic, but we're still not seeing it back to where it was. So they said, well, we're not going to be losing money, but our operating margin is going to go down to 4%. It was at 8%. Stock got hammered. If I were thinking about it, this stock does not trade in New York, so therefore it doesn't have that kind of regulatory profile. It has been hammered. I wouldn't necessarily buy it now, because you are seeing another wave of shutdowns across China. The growth is going to lapse. But if I were looking for a stock to own after this most recent wave of the pandemic is over, I would certainly take a look at this and other hot pot stocks in China, because I think they're really a very interesting play. So that's my sense of what's going on in China and some of the implications for the rest of the world. This is a point in the calendar year where I've been pointing to for months as a time when I start to get more nervous. None of these developments were in that nervousness. They now are. I was nervous about central banks. I was worried about the Fed and interest rates and inflation and all of that. I add these to that worry. The only good thing I can see here is that a slowdown in the Chinese economy likely means that China's biggest export over the next few months is going to be deflation. So if you're worried about inflation, this is a big source of deflation in the global economy, and I think that should ratchet back that fear a little bit as you go forward and try to figure out what to invest in what is one of the most volatile points of the year. This is Jim Jubak. Thanks for watching. If you like this, please like it. If you subscribe so you get more notification about other videos, that would be great. And if you want to see more of my stuff, go to my free site, jubakpicks.com, or my subscription site, which has an extra 3 portfolios, 6 instead of 3, and that's jubakam.com. And you find links to that below. Thanks very much.